Hi, Tim, and thanks very much for having me back on Share Cafe. It's a pleasure to be here. For those of you who I haven't met before, I'm a co-founder and managing director of Laybuy. We founded this company, my wife and I, our two boys, back in late 2016. Since that time, we have grown rapidly, and you can see on the screen in front of you now our Q1 FY22 performance highlights. And the numbers we're most proud of, obviously, is the fact that we continue to grow across all parts of our business. We are annualizing 740 million New Zealand dollars. Our revenue for the quarter was 10.4 million. And our GMV for the UK, the growth engine of our business, up 107% on the same quarter prior year. One of the key metrics for us, obviously, is net transaction margin, and at 2%, that is about where we want to be. It demonstrates we have defaults, etc., under control, and we're opening the funnel wide enough to let through enough customers to grow beyond our current 830,000 active customers, as you'll see on the screen. Our active merchants is well through 10,500 now, given this is a little old as at 30 June. And of course, you will be aware, or some of you will be aware, we raised 40 million in capital recently to help fuel that growth in the UK. If you could just go to the next slide, please, Tim. This slide just shows us the record GMV delivered in Q1, greater than what we delivered pre-Christmas or in the lead up to Christmas last year. And the other slides just demonstrating the continued growth across all metrics. If we could go to the next slide, please. This one here just shows our revenue momentum. That too is all tracking the way we want to see it. And the net income graph down the bottom there showing how we have recovered from those early days in the UK where we suffered from fraud, and now we've put those well behind us and are generating that net transaction margin at the 2% level. Next slide, please. Just a little bit of financial information on these slides. I won't go into detail here, but what I would point to is the UK numbers. The UK showing 107% uplift in GMV, 143% uplift in active customers to just over 515,000, and an active merchant number in the UK up 424%. Also of note in that UK, which again is our growth engine, our repeat customers are up from the same quarter last year from 56% to 62%. So we are definitely showing an embracement, if you like, of Laybuy in that UK market. Next slide, please. The regional performance, the UK just demonstrated there, showing how we are growing in some of the brands. The next slide, please. And not to be forgotten, Australia and New Zealand, we continue to grow in this market. And we're actually starting to put on more of the recognised brands in the Australian market as Laybuy gains more recognition in that space as well. So we're pleased to say that we continue to grow across both Australia and New Zealand, and we are certainly making more of an impact in the Australian market as the weeks and months go by. Next slide, please. From a strategy and outlook perspective, this is really important for us in terms of some of the brands we're bringing on across our territories, but more importantly, if we go to the next slide, this is the affiliate marketing program that we'll roll out later this month, early next. And what the affiliate marketing program will do is increase our merchant base in the UK by around 5,000 merchants between now and the end of the financial year, 31 March. So if you think we've got somewhere around 3,000 active merchants in the UK today, that number will go to 8,000 active merchants or more by March 2022. Our goal is to ensure all these new retailers that we bring onto the platform through the affiliate program are activated via purchases with our customers. It's a very easy process for our customers to purchase. We actually inject a virtual card into the checkout, and customers can then pay, if we go to the next slide, by Laybuy at some of these iconic brands. Then some of these obviously are global, Amazon, Net-a-Porter, eBay, Shoe, Matches Fashions, Estee Lauder, all brands that many people will be very familiar with and our customers will now have access to these brands and be able to pay by Laybuy. Next slide, please. I've talked before about the size of the retail market and the fact that we have grown considerably over the period we have been there. The point of sale financing in the UK accounts for about 4% of all retail sales made online in 2020. So there is a long, long runway ahead for Laybuy in the UK. We've carved ourselves out a position as the known third player in that market, with Klarna and ClearPay being 1 and 2 respectively, and daylight between us and 4th, 5th, etc. So Laybuy is well positioned in the UK, and we continue to grow there. If we just go to the next slide, please. This gives you a sense of the size of the prize in the UK. I think it's underestimated just how big the UK retail market is, at £403 billion, that is. So we're looking forward to continuing our growth here, and the UK is squarely our growth focus for the foreseeable future. Next slide, please. Our outlook for 22, we're still on track to achieve a New Zealand $1 billion in GMV this year. We're still on track to improve our income growth from last year's 34 million by 90 to 100%. And we will continue to improve our net transaction margin as we watch those repeat customers grow. So we've got a lot to look forward to in FY22, some great brands that we're bringing on, and very happy to be able to see that roll out towards the end of this month. Go to the next slide, please. And that's it from me. I'd like to just take any questions, Tim, and hope we can answer all those for you too.
Great, thanks, Gary. Short and sweet. To the point, thank you. Gary, obviously the sector has suffered in terms of share prices up until the Afterpay acquisition by Square. Can you give us a little bit more colour on your thoughts about that acquisition and what that means perhaps for further consolidation in the sector?
Yeah, sure, Tim. I mean, what a fantastic outcome for the guys at Afterpay, and good luck to them, and well done in my view. Look, I think if anybody was commenting that buy now, pay later is just a fad, I think they'd have to recognise that it's no longer a fad. This is here to stay. You don't pay 29 billion US on a whim. And what I think it does is validates the sector. I think it starts the conversation around consolidation. And I'm looking forward to seeing what happens in the next short while. I think it gets really, really interesting very quickly.
And Gary, can you give us a little bit more colour on the affiliate marketing program? You seem to have kind of connected with another 5,000 retailers very quickly. Can you tell us how that works in practice?
Yeah, sure. So Tim, we partnered with Sovereign, Rakuten, and a firm called Awin, and they are affiliate marketing platforms. And essentially through them, we gain access to the retailers that are part of their affiliate marketing program. When a customer pays by Laybuy at those retailers, having come through our app or our website, we gain a commission on every sale. So it's a pretty simple formula. Our role is to drive customers to our app, to our website, and shop through Laybuy's platform onto those retailers like ASOS, etc.
And in regards to the business model, the retailer obviously pays. Has there been any squeeze on margins in terms of what you paid or Afterpay or any of the competitors from the retailers in that perspective?
No, not really. I think the reality is the value we're bringing to retailers via the customer database we have, the average order value uplift they are receiving, and the conversion improvement they are getting justifies the very small commissions they're paying to us and others for that service.
And you've obviously got a contract with Man City in terms of being able to sell their merchandise with Laybuy. There's a frustrated user here who's a Liverpool fan. Are you working your way through the EPL clubs?
Yeah, look, we've got Man City, Man U, Arsenal, and a handful of other clubs. I'd certainly love to get Liverpool on board. So if the frustrated user would like to introduce me to someone he knows in Liverpool, I'll certainly get hold of him. No problem.
And can you give us a little bit more colour or insight into the top three players? You're at number 3 there. What's it take to become a dominant player in the UK and get that number 1 mantle potentially?
Oh, look, I'm not going to sit here and try and fool anyone. The number 1's Klarna by a country mile. You know, they've been there 16 years. They've carved out a pretty formidable first place position. But the reality is the penetration of buy now, pay later in the UK, as I alluded, is only around 4%. There's a heck of a runway there available for all of us. And for Laybuy, you know, we've been active in the UK for 2.5 years. We've now carved out that 3rd position. Our goal is to continue to cement that and start to take more of a share out of Klarna and ClearPay as we do it.
And what do you think of the Australian market at the moment in regards to buy now, pay later?
Oh, look, it's a red sea of competition, which is great because, you know, I don't think many people in Australia wouldn't have heard of buy now, pay later. So that's a good thing. They don't have to ask what we do. And, you know, we've got a great base in Australia and we're continuing to grow there. We're continuing to support our New Zealand merchants who ship or have a presence in Australia. But we also offer great value to Australian retailers who ship or have a presence in New Zealand because we're alongside Afterpay as the dominant 2 players in the New Zealand market.
And what sort of penetration do you see in Australia? I think you said the UK was 4%, but where's Australia at the moment?
Oh gosh, I think the last stats I read about buy now, pay later penetration online was at about 17%. But as a total accessible market, I would imagine that percentage is less than half that, given the size of the bricks and mortar retail market in Australia.
And in the US, I mean, given that Afterpay transaction, where's the penetration there in terms of percentage?
I think it's still in low percentage terms too, Tim. I mean, what are you talking over there from a total accessible market? Trillions? Yeah, it's very low. You know, and I think that's part of the myth busting that buy now, pay later is starting to achieve is the runway for what we do is very, very long, and there's a lot of opportunity for players to carve out their own wee niche, and we intend to do that.
I think that's a really good point, given those low percentages in terms of integration into, you know, the US economy or the UK. There's a lot of upside there for many different players. Can you give us a timeline in terms of what you're looking forward to before the end of the year?
Yeah, look, I'm really looking forward to the affiliate program, obviously, because that really opens up a world of retailers for our consumers to shop with. And I'm looking forward to rolling out our tap to pay solution with some more grunt behind that between now and Christmas and the lead up to peak. You know, it's going well. We just want to turbocharge that as the Brits come back from holiday and start to look at shopping in the high street. So we're looking forward to it. It'll be exciting for us.